Smart traders and investors watch bond yields closely. And after this very short video, you will know why and how they actually work. But right, so now then, what is a yield? This right here is something you're hearing a lot if you're listening to financial news and are interested in financial markets. And in the case of bonds, a yield is just another word for your yearly return on a bond. And so, for example, if a bond pays $40 per year and you paid $1,000 for the bond, the yield is 4%. And here it's important that the yield is pretty much always calculated per year. So even if the bond is 2 years or 10 years, when we say that the yield is 5%, we're talking about 5% per year. So as I said here, when people talk about the 10-year Treasury yield hitting 4%, they mean that investors are getting 4% annual return on that 10-year government bond. But now then, what does the yields actually tell us about, things like growth, inflation, and so on and so on? Well, a rising 10-year yield can mean that investors expect either stronger growth or higher inflation. But what does a falling 10-year yield mean? Well, this can mean investors might be seeking safety. And it can also mean that investors and traders are fearing economic problems. But now, what about the difference in time? So, for example, the 2-year yield basically shows what investors expect, for example, the Federal Reserve to do more in the short term, while a 10-year yield, which is much longer term, can show expectations for the next, perhaps, decade of growth and inflation. Alright, so this video was just a very short clip from our full guide on bonds for traders and investors right here on YouTube. To watch the full guide, simply click or tap on the screen right here. I hope I will see you all over there very, very soon.